Good afternoon, greater Philadelphia area. This is Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. We both work at the Tom Toole Sales Group at RE/MAX Mainline, the #1 RE/MAX team in Pennsylvania since 2018. And we have got a ton of stuff to cover today. We got a Fed meeting that happened last week. We've got the fallout after the meeting. We've got some comments from Jerome Powell. And something that we're going to talk about next is like what to do when people start having cold feet and like not forecasting the outcome. We were literally just talking about this before the show. We also have a new CFPB leader. There's some TCPA laws and tariff news, and Gary V unloaded on real estate agents. So if you get some value out of this, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team, you can do that with the link in the comments and talk to Sarah herself. I know she's helped a bunch of listeners as of late, so we'd be very grateful for the connection. So the Fed met last week, Sarah. I know you were probably watching live, like you always do. The live stream is going. You got like multiple TVs analyzing Jerome Powell's facial expressions. Yep. In all seriousness, so they met, and there was no rate cut, which I don't think was a surprise.
Right.
And that's what most people forecasted. But it always is important to look at what gets said afterwards. And if you look at some of the breakdowns of what Jerome Powell said, he had his initial statement was, following weakness in the middle of last year, activity in the housing sector seems to have stabilized. There were some questions around housing, and it really seems like what they're focusing on now is that they've kind of moved the target of the 2% inflation. Now they're like, well, we're in like the mid-twos. It's okay.
Yeah.
And they're really focused on the job market. And what that tells me is that this is going to be kind of the economy we're in over the next 12 months. And obviously that affects housing and rates and a whole bunch of different things. What's your reaction to all this? I mean, this wasn't very surprising.
Yeah, I mean, I think I did not anticipate a rate cut, so that is not surprising that there was not one. As far as being focused on the jobs report, I mean, I know there are different things that kind of trickle in or change whatever the report says kind of after the fact once they factor in other things. So I usually kind of just take most of it with a grain of salt. Yeah.
And, well, I think that's a reasonable approach because you see the markets react. They always, like, spike up and move down. And, I mean, this is what people thought was going to happen. There was also the question of, like, President Trump coming out and saying, I want lower rates. And an interesting comment was last Wednesday, Federal Chair Powell said that he's had no contact with the president since last week and when he would demand that the interest rates drop immediately. Are you surprised there?
No.
I'm not either. I think that we're going to talk about these tariffs in a second because I think there is a political play here with what's been going on, and that's going to affect home building costs. We'll talk about that in the next segment. Powell went on to say that they will need the central bank will need to see real progress on inflation or some weakness in the labor market before they consider making adjustments, and they're still sticking to their 2% inflation target. So, you know, and they're not changing course. Like, this is what we're going to be getting out of the Federal Reserve. So, you know, what I see here for all of us listening about housing that are, you know, tuning into the show, don't expect some like magical like rate cut to happen. And we've been talking about this for a while, that the message you got to have with buyers and sellers, because most of these sellers got to go buy a home, is that these are where rates are going to be unless something very bad happens, like a lot of job losses, right? No one wants to see that. So make your decisions with the thought that this is where rates are going to be. We're seeing like 7.25. I don't know if they're going to change too much. Are you saying anything different? What are you saying to clients here?
No, I'm really not expecting there to be some huge shift. I'm just kind of prepping clients on, you know, that sometimes even if it's not enough, like obviously everybody wants lower rates. And I feel like I say this like pretty frequently. You know, sometimes stability and not having things jump up and down constantly is better both for buyers and sellers than having some, you know, huge drop down and then a spike up. You know, having things being stable and not jumping all over the place gives people a sense of certainty and the ability to kind of move forward. I think that otherwise you get locked into a state of, well, what if there's something better tomorrow? And there could always be something better tomorrow. There could be a better house that comes up tomorrow. There could be better rates tomorrow. There could be like so many different things could happen, but you have to kind of look at what's the most likely scenario and then work with what you've got.
So that's really well said. I think that's pretty smart because a stable market is what we're used to seeing. I think what's abnormal are the past, like 2020 to 2023, where everything was like up and down all the time, and it was really challenging. So, and when you get a stable market, it moves a little slower. You don't have to make decisions outside of the house. Now, sometimes you do. I think that sometimes you have a limited window, but if you're prepared properly, you have the ability to make these decisions a little more slowly. You don't have to, decide within like 30, 45 minutes. Now, prep work is still important. And what we're seeing so far, through the year, is that the market's been pretty stable. We're seeing showings are up 4.5% compared to the previous week. We saw purchase contracts are up 7.1% compared to the previous week in Bright MLS, which tells me that buyers are kind of okay with this now. Are you seeing the same thing?
Yeah. I think this is what we've had for, the most recent chunk of time. And, rates that is something that comes up still as like a point of discussion, but it's not something that's necessarily stopping people from continuing.
Remember what it was like when rates hit like 8% back in the fall of 2023? Like how different that was than this? Do you want to maybe compare the two? Because that was a shock to the system.
Yeah. So, if you think oftentimes I think we'll kind of say 7% is that line of people starting to feel like once it crosses the 7% line, people are like, even if the price, like the actual difference in your monthly payment or the actual like difference in carrying cost there is not that different from something in the upper sixes to the low sevens. They just mentally, it does something more. So that you have to kind of multiply that by like a lot for what hitting 8% did to people. And when you run the cost sheets, a full percent there does make a big impact. And at that time last year, we were still a couple years off of it, but we were even a year closer to that time frame of having those historically low rates where it felt like an extra, kick.
Yeah, and I think that's a really great way to look at this here because the reason people move, we talk about this all the time, is that there's something going on in their life. And the smart consumer, what they're going to do, and for everyone listening that's maybe thinking about making a real estate decision, you want to have this same kind of thought process is, all right, what's actually happening in the market? What's the data say? And real estate agents have a tendency to speak from like, here's what I think is going on, or here's what normally happens instead of looking at data. So if your agent's not showing you data, it might be time for a new agent. And if you're not using data, spend 15 or 20 minutes a day just studying these trends, because when you show people what's going on, they're going to say, okay. And then there's going to be some that say, all right, I'm moving ahead, even if it's maybe not the best time to buy or not the best time to sell. And that's what a lot of folks don't realize. So I think that's a pretty important factor here. And we're coming off the lowest level of transactions since, 1995. So I'd imagine we're going to see a bounce here. Looking at these comments, have you had any like negative reaction or positive reaction from any folks that you're working with? Like what are you seeing in the market? I didn't see anything. I think it was just kind of business as usual.
Yeah. I really haven't had anything of note for like strong reactions either way. It's just kind of like, here it is.
Yeah, and obviously nothing changed, so it makes it a little easier, right? Yeah. So now with that, I think there is some anxiety around the market now because of inventory levels, because rates have been higher. Remember, over the past 50 years, the average 30-year fixed mortgage rate is 7.74%. So we're below that, so that's good. When it comes to buyers getting cold feet, like do you see any buyers like hesitant to move ahead in general, or like when they're getting under contract, or are you seeing cold feet as being a thing right now because of the market conditions?
I think if you've got very cold feet, you're not even out looking right now.
I agree with that.
Like I haven't gotten to the point of I have not, like I haven't had it happen where we've written an offer, gotten it accepted, and then they've come back and said, oh, wait, the rates. You know, because like that's something that was already factored in. Now, I did recently have a situation where something changed on one of the buyers' credit, like which was not their fault, but you know, things take a while to get like sorted out, and it would have made a huge change in their monthly payment. But they were able to. They talked to a couple of different lenders, and they were able to work things out to where there wasn't a big change. But otherwise, I feel like, because we're running, like I'm giving people that estimate before you write the offer so that it's not, that's not a thing. Like they should know going in, writing that offer, they should know what the payment is going to be. They should have spoken to their lender. They should, you know what I mean? Like, and I'm going to provide them with that estimate as well so that it's not like a shocker. And I usually like to estimate higher on the interest rate, higher on the monthly insurance, and not like crazy high, but like to where you're going to see, you have a buffer there, and where the hope is that you see those numbers come down versus like the other way around.
Well, that's smart in general, because I mean, sometimes lenders, like they give you like a sexy rate, and then it's kind of a bait and switch, especially if it's not somebody that you're used to working with. So that's a good move on your part, especially when it's an unfamiliar lender. And, you know, your comment about cold feet, I mean, there's some people that are just like, they're just not even in the market. You're absolutely right. Now, there's other times when, you know, you deal with this, and you got to navigate it carefully, because sometimes you might lose a deal. Other times you might lose a client. And we're in a more stable environment right now, but there's reasons why people are hesitant. I mean, they're not finding what they want. That's a really common objection. They're concerned that rates may go down later in the year based on some of these projections. And if you're not navigating that appropriately, you can lose clients pretty regularly. So if you get this feeling of someone maybe getting cold feet or hesitating a little bit, what's your like, what do you recommend to people listening? Because you've put together some transactions where, I mean, I know I've had them too. It's like this thing could die at any minute, and then it ends up going, and it's like, wow, I can't believe we actually got that done.
We pulled it off, yeah. I would say, like, listening to what their actual concerns are, trying to like have a conversation where they talk and say how they're feeling and what's going on, because sometimes it's not what you think it would be. So giving them like the space to be able to like feel comfortable talking about what their like concerns, fears, you know, like all of those pieces might be. And then, you know, always letting them know that like they don't have to do anything. Like there's consequences, the word that I'm looking for. There will be repercussions of whether or not you move forward. There will be, you know, but like you don't have to do anything. And then I guess if it's somebody, let's say it's a buyer that's been looking for something really pretty specific, just saying like, you know, like, yeah, when we had started this search, the rates were different, but like it took this long for this house to come up. So like, what if we wait, you know, 8 more months for hopefully those rates to come down to where you want them, but then the house isn't there? Like, what is it, the rate or the house that's more important? And just kind of like saying it nicely, but putting out there, you know, like what is it that's the most important? And if you want to wait for everything to align exactly, we can do that. It's just, it could be a while.
I love that your first reaction was listen, because most salespeople, they talk way too much. And if you feel like you're getting talked into something as a consumer, most of them are going to recoil and say, well, I'm definitely not doing this now.
Right.
And I don't want to work with this person anymore, which is where you got to be very careful. So, you know, listening is definitely a superpower. And, you know, then when it comes to that, you also talked about delivering numbers beforehand, like giving them the estimates. And I'm a big believer that you've got to send people things in writing before you start talking to them about it. Like reviewing things verbally over the phone without any sort of document in writing. Like you imagine you get an offer on a seller's property. Maybe you get multiple offers. When you send those summary sheets beforehand, before the discussion or an inspection reply, give people some time. Let it breathe a little bit, because when you call and try to jam these things down folks' throat, it just doesn't work out that well. And agents do a really bad job of sending things in writing, because in this business, if it's not in writing, it doesn't really matter, right? I mean, the verbal agreement, right? People get mad. Oh, I had a verbal and then it didn't go anywhere. You didn't have an agreement.
Yeah.
That's real estate 101. So listening, sending things in writing, letting them breathe, giving it some time. I'm a big believer you're much more likely to get a slow yes than an immediate answer. Like you gotta let these things play out. Have you ever found that like agents sometimes forecast the outcome and don't let it breathe, or like what's your experience been with that? Maybe as you've grown as an agent, and then also on the other side when you're working with somebody else.
Yeah, I mean, I think I have in different times, like you think something is going to be like, oh, this is going to blow everything up. This is going to be terrible. And then when you actually like present it, it's not that bad. It's not that big of a deal. Like you don't know what people's trigger things are going to be. There's also times where I've like been like, oh, that's not that big of a deal. And then like, oh, it was, So I think just kind of presenting what the deal is and then giving them, like, if you have the time to do it, be like, digest this, and then we'll touch base, and then some hours later, so that it's not quite as emotional. Because like sometimes when you first get something, it's like, and then if you just like give it a minute, it's like you read through it again, it makes for a better conversation. And then as far as like working with other agents, there's just like a general feeling that you get of like relaxedness when like you can tell it's somebody that's not just like anxiously thinking every deal is going to blow up and everything needs to be decided right now and everything is like like there's like a sense of calm that comes along with it that makes you feel confident that it's going to go through. And I think that it comes through to all elements of the negotiations and the deal when it's like like, all right, let's figure it out, as opposed to rah.
Yeah, and there's you said a lot there that's really insightful. There's some instances when agents create arbitrary deadlines. Hey, we need to know by right now, and it's based on what? And I mean, you don't know where the other party is, what you have going on. Like, what if you're walking into an appointment? I mean, or what if you're going to a doctor's visit, right? What if you got a sick kid at home? There's so many things that can happen.
I feel like what happened as far as like setting arbitrary deadlines, more often than not, I get that from like if I have a listing and it's like the seller that's like, and I need to know by this time, if they're, and it's like.
Consumers do it as well.
And right. Oh, yeah, for sure. And it's like, no, per the contract, we don't get to say that, you know? So, and just bring it back to the contract and to like how the timelines actually work. And, you can say we would like to know sooner, but both, I feel like you can't let the clients run the show. You have to you want to listen, you want to inform them. And a lot of times you can tell them these things in advance, but it's when things are actually happening, when it matters to them that they're going to like want to do different things. And you just kind of have to bring it back to like, this is how the process works.
That's a great point that you have to, there's this like the customer's always right. Well, yeah. In real estate, the customer isn't always right because they don't read the documents they sign. Right. And if you're not educating folks on that, you're not doing your job as an agent. Right. I can't stress that enough. But when I found, and I see this happen all the time where like people don't get an answer right away and they're like, all right, we're going to move on. And I'm like, well, I just haven't heard back from these people yet. Right. I just called them 45 minutes ago. Like it's not, and speed and time can be an enemy in the negotiation. I hear that for sure. But sometimes you got to just everyone's got to chill out a little bit. Now there's the risk another offer comes in. I get all that. I understand where the anxiety comes from. When you let things play out, it's usually going to work out in your favor versus trying to like forecast these outcomes. And I think that's where like people always go to immediately like they're like 3 steps from death, right? Yeah. They're going to decline this offer, and then I can't pay my mortgage, and then I'm going to die. And it's like that's how it goes, and it gets way too complicated. So with these cold feet issues, if you just let things play out a little bit, you detach from the outcome, which is easier said than done. Right. I think that takes time to develop as a skill for an agent. You've also got to have some other business happening because some agents get so obsessed that this is the only thing I have going on right now. How am I going to pay my bills this month? Well, that's a you problem. That's not a them problem. Right. And I say that with peace and love, but, you go make some phone calls and fill up your pipeline, and you're going to be
Right.
fine.
Yeah.
That's so critical in dealing with these cold feet, because then you can say to people, hey, we don't have to do anything, Sarah. Like you said. And all of a sudden, I think it just eases everyone up that they don't feel like they have to make these decisions.
Right. I agree.
So when you see news like this come out from the Fed, just remember, people are going to get a little nervous. It's our job to educate them. And the more you can educate, the more you can, the bigger pipeline you have, the easier everyone's going to feel. You don't want people there's enough stress with moving as it is. They don't need stress from the real estate agent.
Right. Right.
All right. So we're going to take a quick break. We're going to come back and break down the CFPB, the Consumer Finance Protection Bureau, has a new director, and he's ordered the agency to stop working. We also have some tariff news coming out of Washington and some builder news and TCPA laws. A lot of legal stuff here. We'll break it down next on Tool Time, Real Estate Radio on WWDB 860 AM.
For the best local mortgage service and great rates on your money, look no further than Mortgage America. We've been operating in the greater Philadelphia area for 40 years with a focus on smooth, easy access to home purchasing. Whether you're a first-time buyer, upsizing or downsizing, or just refinancing, we have programs for you. We also have closing cost assistance programs and access to subsidized interest rates. Pre-approval is free, no costs or commitments. To learn more, visit our website at mymortgageamerica.com or give us a call at 610-439-8000. We always have a person available to take your call with around-the-clock human service. Purchase your home with the personalized, local service you find at Mortgage America.
Mortgage America is an equal housing lender. NMLS 128501.
When looking for a mortgage, you shouldn't have to sacrifice service to get a great rate. Visit the Sutera team at Cross Country Mortgage. We are your local Pennsylvania lending experts with loans that fit nearly any unique home buying situation, including first-time buyer options, low to no down payment options, and non-agency products. Get a free pre-approval now at ccm.com and search for us, the Suteras. That's S-U-T-E-R-A. At Cross Country Mortgage, when it's time to move, we're right behind you.
Equal housing opportunity, subject to credit approval, NMLS 3029, NMLS 1390366, MLSconsumeraccess.org.
I'm Tom Toole of the Tom Toole Sales Group at RE/MAX Main Line. If you're thinking of becoming a real estate agent in the greater Philly area, I have a special offer for you. Our team did $165 million of volume in 2021, making us the #1 RE/MAX team in Pennsylvania and a top 1% team nationally. Our agents love us because we offer them a successful career, a great life, and an unbeatable culture. Agents who've been with us for at least a year average 30-plus sales. Even our brand new agents average 17 to 24 sales a year. We offer proven systems and expert training. We help you set more appointments and sell more houses. Now here's the offer. If you don't have a real estate license yet, we offer real estate scholarships so you can get one for free. Check it out at realestatescholarshipprogram.com or visit the Tom Toole Sales Group at RE/MAX Main Line at tomtoole.com. That's tomtoole.com. Get more out of your real estate career, and remember the real estate golden rule. You always get more when you work with Tom Toole.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
Welcome back to Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. We both work at the Tom Toole Sales Group at RE/MAX Main Line, the #1 RE/MAX team in Pennsylvania since 2018. And we are covering all sorts of legal Washington issues when it comes to housing. I guess it's better than the commission lawsuits, right? I mean, I think that's maybe a positive. So the CFPB's got a new director, and he ordered everyone to stop working yesterday. Very controversial. We've also seen that the National Home Builders Association is urging the president to exempt building materials from proposed tariffs, and the tariffs have been paused. And then we've got some TCPA laws that were paused from being enacted days before they were supposed to come out. That's the Telephone Consumer Protection Act. So a lot of stuff to unpack here. Why don't we start with the CFPB? So just out of curiosity, Sarah, how familiar are you with the CFPB?
Not terribly.
I would imagine most people feel like you do. That's why I asked. So, so the CFPB is the Consumer Finance Protection Bureau, and they're they're dedicated to making sure they're treated fairly by like banks and lenders and financial institutions, and they've got all these rules and regulations. It's a government watchdog agency, and the CFPB, they police things like RESPA violations and like lender co-marketing agreements and banking rules. So there was a new director. His name's Scott Besant. I think I'm pronouncing this correctly, and he recently, he's the acting director. He's not the long-term director. So last week, President Trump fired Director Rohit Chopra, and the first official action, this happened yesterday after 4 o'clock, was to order staffers to stop Bureau activities, including the issuance of final rules, settlement enforcement actions, or participation in legal cases. And I was kind of shocked they're just stopping working. It seems like, and this also happened with the TCPA laws. So if you don't know what the Telephone Consumer Protection Act is, there was all these new regulations about texting people, calling them, leaving voicemails. And there was all these new rules that were going to go into place on the 27th. Then like the 24th, they said, hey, we're not enforcing it. So this is the second time we've seen this. What do you think about this? As kind of someone that, I study this a lot more than you do, obviously. I mean, what's your reaction here?
So they just told everybody they have to stop working.
That's what they said, yeah.
I mean, there's going to be things that happen because of that, right? Like, I feel like there's so many changes that are being thrown out there and like at a very quick clip I hope they're figuring out like what the repercussions of some of this stuff is, because just having everybody stop working.
Well, and there's some history to this. So the CFPB has been regular targets and they've been accused of overstepping their enforcement authority, and by people on a lot in the government. And this isn't like the first time they've the Bureau's tried. There's been an attempt to dismantle it. The Supreme Court has weighed in on the constitutional validity of the CFPB on multiple occasions, but it never went so far as to dismantle the agency. Most recently, the court rejected a challenge to the Bureau's funding structure, and they also, in 2020, the court cleared the way for a sitting president to fire the director, who was insulated from that before. So I think there's more to it than just like stop working, but it feels like a lot of people feel like they overstep their bounds on some of these rulings that they make.
Is there any data on how consumers feel about what the Consumer Financial Protection Bureau does?
Let's look.
Because I feel like if it's there to protect consumers, that should weigh in if consumers are happy with it or not.
So this is from Google AI. So consumers view it positively. They believe that it's improved consumer financial marketplace by making it more transparent and fair. They like things like Know Before You Owe initiative. Some of the criticisms are that the regulations are overly burdensome to businesses and stifle innovation, and that the leadership is susceptible to political influence. So, I would just imagine there's going to be some changes, and they're trying to figure this out. There was some foreshadowing about this. There's things like capping like overdraft fees and stuff like that. But someone that's overdrafting their bank account, that's ridiculous. They're basically taking that money from the institution. So, I think this is just more of, we're going to see some reform here with the consumer side. I'm curious if anything actually gets to like the DOJ and the real estate commission stuff like that. That's my question here, because I see the CFPB stuff. Will they oversee RESPA? And, RESPA has rules like sellers can't demand which title insurance company gets used to get a deal, right, and things like that. They monitor mortgage co-marketing agreements and illegal kickbacks and that sort of stuff. So it does affect our business in some ways, not so much directly, but certainly there's an effect there for sure.
Yeah. Interesting.
The more interesting thing is the TCPA laws. So this would have had a direct impact on real estate agents. So they hit the pause button on this. This was on the 24th, and it was a There was new rules about how businesses, including real estate agents, can send text to consumers, and you had to have like 1-to-1 consent. There was a certain period of time you could text these people, and the new rule requiring stricter written consent was set to take effect on the 27th. Now it's pushed back to 2026, and it's the rule is being challenged in court by the Insurance Marketing Coalition and other groups who argue it's too burdensome, especially for small businesses. And there was some significant fines that would have come across there. So I think that's something that would have affected a lot of real estate agents right off the bat, especially if it's like an old lead or someone that's been in your database for a while. So, I mean, and we've already seen text messaging has really been cracked down on with just using the CRM. So, I mean, what's your view on this one here? Because it just seems I'm just seeing some pro-business things happening.
Yeah. So, I mean, my thought is that even if you are fine with getting the text messages and even if like you want that correspondence, I don't know that many people are going to log in and like accept it. You know what I mean?
Mm-hmm.
Like, and if there is something that you're getting that you don't, can you still just like block things? And
you can say stop, and that will cause people not to.
Stop, and then so I mean, I think that getting written consent is a little bit. I mean, I get why they're doing it because like we do, in any given day, the number of random text messages and like phone calls and different things that we get is like can be a lot, but and some of them are from things that I have in fact signed up for and been like, yeah, text me, and then I'm like, oh my god, this guy.
What did I do?
Right. But you can always just text up. And I think that for a lot of people, like they probably do get, as long as you're not like hounding them on like a daily or even like weekly basis, like depending on the level of like lead that it is, if it's something that is further down the line, but you're just, kind of keeping in touch. I think that those are probably people who, when the time actually is right, when they need it, they're going to be happy that the text came in. But they were not people that were going to go in and like subscribe and be like, yes, please text me. But they'll be happy that the text came through whenever they're actually ready to do something. As long as you're not being like a maniac and like every day, like just don't be too much.
Well, I think there's, when it comes to sales, we know what the Harvard Business Review data says. We talk about this all the time, that you need to make a certain amount of attempts to even get in contact with folks in a lot of cases. I think of things like, you sign up for, I don't know if Eric gets the like the razor blades in the mail, right? Like the Dollar Shave Club or whatever. Right. Like you sign up for them, they text you all the time, like your order's on the way, all this stuff. You'll see that with like, soap companies. I mean, like they're constantly texting you things, and you signed up for it, but it's like, all right, this is a little much. I'm going to turn it off. But
pizza places,
right? I mean, there's all sorts of stuff, and the reality is, when I say I'm going to buy something, I'm usually pretty intentional. But it may take a couple attempts because I have other things going on.
Right.
And I think you're in the same boat. You're a mom. You've got a career, right? You've got a husband. Like, you're not just sitting around waiting for these messages all day.
Right.
And I don't think a lot of salespeople get that. They don't understand that life happens and it's hard to get in touch with people. So from a practical side, and we know that some people are more likely to text than take a call and vice versa, I think this is a good thing for agents who are going to continue to follow up with people and make calls and reach out to folks. That's pretty important. So I think that's a big win. I mean, both of these are pro-business initiatives here. And the consent is pretty cumbersome, and the fines were going to be expensive. And all you need is one person to report you. And I'm not saying violate these laws or anything like that. And what I'm saying is that, sometimes people change their mind, and it's like, well, you gave me your number, you gave me your email, you wanted to talk about this, I'm here.
Yeah.
So that's where it can get a little frustrating sometimes, for sure. So I do like both of these for the business sense. I think it's good for especially us running real estate businesses.
Sure.
So let's talk about these tariffs, Sarah. This is the other one here. So yesterday, the National Association of Home Builders, they urged our new president, President Trump, to rethink his plan to impose 25% tariffs on imports from Canada and Mexico when it comes to building materials, because they're concerned that it would rise the cost of housing. In the letter that they sent to the president, it said bringing down the cost of housing will require a coordinated effort to remove obstacles to construction, be they regulatory, labor, or supply chain related. The National Association of Home Builders stands ready to work with you to accomplish these goals. However, we have serious concerns that the proposed 25% tariffs on Canada and Mexico will have the opposite effect by slowing down the domestic residential construction industry. So then yesterday there was news that dropped that there is a 1-month pause with Canada on these tariffs, and a lot of that had to do with this is all like political bargaining. Like that's really what this was. I mean, is that your take on this here?
I think so.
Well, there's obviously, and I think I'm just glad they paused it.
Yeah.
We don't need to see building costs going up here. So
No.
I'm optimistic here that I know a lot of people were worried these tariffs were going to send like housing costs like through the roof.
Mm-hmm.
It looks to me it's more some political maneuvering.
Yeah.
That's
Posturing.
posturing. Yes, that's and you know they also did came to a deal with Mexico as well to pause these tariffs. And obviously it looked like the president got what he wanted, which was like border control and some other stuff. So the good news is for housing, we're not going to see these big tariffs coming into play.
Mm-hmm.
Were you nervous about this at all? I don't think anyone knew what to expect.
Not really. I didn't really know what to expect. And while I'm glad that they got paused, it does make you, and always, like, whenever there's, like, headlines about anything, it's like, is that just a headline or, like, what's actually coming from this? But if it was, like, blowing a bunch of smoke about these tariffs to then get something else that he wanted, you're kind of making anything that you say questionable. So, like, what that does for, like, future things that you say, it's always kind of like, what is it, you know? And I get that part of that is just like politics, but don't love it.
Yeah, and I think that's unfortunately this is why I don't like politics.
Right.
You hear these things, the market gets all worked up,
Mm-hmm.
and then you know they pause these things. I'm happy for housing. I'm happy for real estate. I'm happy for people that are buying new construction because 25% is a big increase, and we're already seeing very low housing affordability. So this is, I think, a lot of people and a lot of experts were concerned about this. So I think overall, this is good news here that we're seeing that these tariffs aren't going to be at least implemented right away. Hopefully that's how it continues.
Right.
So don't worry yet. We're going to take a quick break. We're going to come back. We're going to talk about Gary Vee. He was on a private webinar with Neil Dingra over at his Forward Academy invite-only webinar. He said some really interesting stuff about real estate agents. We're going to break it down next with Sarah on Tool Time Real Estate Radio on WWDB 860 AM.
You shouldn't have to deal with all the red tape when getting your mortgage from a big or online bank. At Mortgage America, we have access to big bank money, but with the personalized and detailed service of a local bank. We are here in your community and ready to serve with fast settlements, low down payment options, and first-time homebuyer programs. Pre-approval is free, no costs or commitments. For more information, visit our website at mymortgageamerica.com or give us a call at 610-439-8000.
Mortgage America's equal housing lender. NMLS 128501.
The Tom Toole Sales Group is the #1 RE/MAX team in Pennsylvania with over $165 million in volume for 2021. I'm Tom Toole, and our team has achieved that kind of success by being a great place to work with and to work for. No one knows Greater Philly better than we do. We know real estate, but more importantly, we're real people. We hire the best agents, and we give them all the tools to succeed. Even our brand new agents sell 17 to 24 homes a year because our team delivers the best experience in real estate. Teams deliver a better experience than individuals, and we're a top 1% real estate team in the country. We call it AAA service. We're your advocate, ally, and advisor because this isn't a transaction to us. It's a relationship. If you're buying or selling a home, call the Tom Toole Sales Group at RE/MAX main line at 610-692-6976 or visit tomtoole.com. That's tomtoole.com. Sell your home for more, and remember the real estate golden rule. You always get more when you work with Tom Toole.
When looking for a mortgage, you shouldn't have to sacrifice service to get a great rate. Visit the Sutera team at Cross Country Mortgage. We are your local Pennsylvania lending experts with loans that fit nearly any unique home buying situation, including first-time buyer options, low to no down payment options, and non-agency products. Get a free pre-approval now at ccm.com and search for us, the Suteras. That's S-U-T-E-R-A. At Cross Country Mortgage, when it's time to move, we're right behind you.
Equal housing opportunity, subject to credit approval, NMLS 3029, NMLS 1390366, MLSconsumeraccess.org.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today today at 610-692-6976 or visit TomToole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
All right. Welcome back to Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. We both work at the Tom Toole Sales Group at RE/MAX Main Line, the #1 RE/MAX team in Pennsylvania since 2018. And Gary Vaynerchuk, I've had the chance to see him down at a real estate event. It was called Agent 2021. I think it was in 2018. And then didn't make it past 2019, but it was a cool event. He was supposed to do this for 4 years, and it was at like Hard Rock Stadium, so you were like on the field, which was pretty cool. But Gary's got a lot to say about real estate agents and running a business. He's an entrepreneur, so we're going to break down some comments he made last week. If you get some value out of this, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications, and if you want to schedule a call with our team about how to navigate the real estate market, and make sure you're working with an A player like Sarah, you can do that with the link in the comments. So here's what he said. I just want to get your, I don't know if you read this or not. I'm just going to lay it on you here, Sarah. Good. Even better. This is why this show works, because we get real reactions, not some BS. So Neil Dingra, he spoke at like BAM Mania, really smart guy. He has this thing called Forward Academy. It's like a coaching group. And they were asking about real estate agents losing morale in today's market. So here's what Gary V said. B player, Sam, a tough market is what A players eat. He went on to say this industry has a lot of pretenders. Every industry does. This industry is especially good at it because when it's good, a piece of food can sell a home when it's hot. So I need everybody to hear this. Morale is low by C, D, and F players in the real estate industry. A players are hoping that the market stays down because it's weeding you the F out. What do you think about all this?
Yeah. I mean, I think if you go into any field with the expectation of it's only easy and like the payout is great and everything is smooth sailing all the time, like that just doesn't seem like a reality that exists.
Yeah.
Or at least wouldn't for long, because then everybody else is going to find out about it and try to get into it. So I think that when it is a little bit of a tougher market, it tends to go better for agents that know what they're doing and, kind of roll with what's going on. Because there isn't there aren't all the people that are just in it for the easy stuff leave.
So I totally agree with you. And I mean, you've been doing this. You're in Club 13, right? So Club 13 means you've made it more than 5 years in the real estate industry, because 87% of people fail in the first 5 years. And you've been through some interesting, like you went through a global pandemic a month after you started.
Yep.
Maybe a month and a half, right?
Yeah.
And then you went through, these transitioning markets here. And there's a lot of people that we both know that have come and gone and that like didn't renew their licenses. So it sounds like what you're describing is a lot of what those people kind of ran into, where they just, I mean, is that fair to say? I mean, you've seen enough to know.
Yeah. Yeah. I mean, I think there are definitely a lot of people that, when things turn, when it gets harder, either they leave the industry entirely or they start doing the grass is greener and bouncing around to different places, which to be in some cases, I think it is the right move for people, and they stay put at the next one, and it was a good decision. I think you also tend to see oftentimes when people start bouncing, it's not uncommon for them within 1 year to all of a sudden have gone to 2 or 3 different switch brokerages many times. So I think that also shows that there's not like a quick flip that just makes everything rosy and great. Like no matter where you are, it's you that needs to do the work. Nobody's going to just give you money.
I mean, yeah, that's well said. I was not expecting that answer. And I mean, there are agents out there, they go like split chasing, and maybe I'm going to get an extra 2% here or 3% there, but then they're not bring in any more new business, or they're actually like leaving business on the table. And your environment should level you up, don't get me wrong, but at the same time, in a lot of cases where you are, I mean, maybe the best place to build a business. I mean, that's usually how it goes. Gary goes on to say, after a little bit of pushback in this back and forth, that even top tier agents were feeling the weight of the current market. And Gary responded, said they weren't truly A players. He said, you know why you think they're A players? Because they're A players at selling, but they're F players at spending. So he went on to say, we got to get back to grandma and grandpa principles, save some money. We don't even save any money anymore. And, he talked about agents raking in massive commissions and spending them just as fast on like luxury cars, lavish meals, vacations, all sorts of stuff. I mean, that is a real problem in this business. And I mean, what do you think about that? Like, just like the principle of like saving money and that sort of stuff.
I drive a 2013 Honda Civic. So
Yeah.
I mean, I don't know that would be industry specific though. I think that's just, it doesn't have to be like real estate focused for like getting large checks and then spending all your money and not saving. But in anything that is commission based and that you cannot know with you're going to be bringing in X amount, like you either need to have a cushion there saved up in case because like things come in waves, both good and bad. So like, I feel like a lot of times like you'll get 3 deals at a time and it'll be amazing. And you're on like this, like, woohoo. And then the next month, like something that you thought for sure was good falls apart. Somebody that you have shown, 35 homes to all of a sudden is like, yeah, I'm actually going to move out of state. Or, oh, I've changed my mind. We're going to do an addition. Or, like things that you were pretty certain were going to come together don't. So I think you either need to have a savings piece set aside or have like a plan in place or else you could very quick, like things could all be great and then very quickly things turn and you could be in a bad spot.
Yeah, well, I think that's so well said because like a lot of real estate agents don't pay their taxes.
Yeah.
This is very real. They don't even think about it. They don't have any saving. They get a check and remember, taxes aren't taken out of your check when you're a 1099 independent contractor. So they get a check. They're like, great, I'm spending all this money.
Yeah.
Well, wait a minute. You got to pay taxes. You probably want to save some of it. Forced savings can be your best friend in a sales industry. Mm-hmm. And then, like, what do you need to live for the month? Like, budget that away. I mean, you've got a daughter. I've got kids. Like, there's all, like, the money goes a lot of different places.
Yeah.
And then, you have a real business plan. And in order to come up with a business plan, and he's absolutely right here, you need to think about, like, what's your survival number? Like, what do I need to just live over the next 12 months? And then what's like your, hey, things are going pretty good number. Mm-hmm. And then what's your like dream life number? And when you have those 3 things, it can really help. But a lot of agents don't even know how much money they make. They talk about top line GCI, gross commission income, as their income. That's not what they made. It's
right.
You spend money on, you send out some mailers, you do some marketing, whatever that is. Like that's how it works. So I think that's a really good point. I also don't drive that nice of a car. So I'm not, believe me, I'm right there with you. Like, but some of these people, like,
yeah. I'm also like not a car person. So
that makes 2 of us.
Right. So it's not like, I don't really care.
Like, and we also have young kids that are going to destroy the car.
Destroy it.
Yeah. There's no point. So, all right, here's the last part of this quote here. I'm going to have to edit it out. So, final message from Gary V. Anyone who's complaining and crying when things are tough, by definition, can never be an A player. So they better acknowledge their B-ness right the F now. What do you think about that, Sarah?
Beta.
Yes, that was. I'm not cool enough to even use that word, but go for it.
I think that. Can you read it one more time?
Right. Anybody who's complaining and crying when things are tough, by definition, can never be an A player. So they better acknowledge their B-ness right the F now.
Yeah. I would agree with that. I mean, I think that the expectation has to be that things are going to be tough sometimes. And, I mean, I feel like everybody gets to have like a minute to maybe just like scream in their car when you're having a bad day or when like things are changing or whatever. But then you have to go back in and like change your attitude and try and be positive and figure out what you can control versus what you can't control. And, hopefully have enough in your pipeline and enough saved up that, one thing going wrong isn't going to derail everything. And I think that again, that goes across the board for both real estate and really any industry and life itself. If all you do is complain and cry when things are tough, like everybody, like you get to like vent and you get to, you know what I mean? But like, then it's up to you what you do next.
You and I have done that more recently because we've been working together so long. Like, I mean, I don't normally do that with people. I think you know me well enough to know, but it's an A player just keeps moving anyway. Like you have like the 5-second funeral, right? Like complain about it. Things go wrong. You know what? If you're going to complain about it for 3 days, that's not going to help you. So that's a great point. You got to tell me what beta means after the show, Sarah. That was a new one for me. I feel much cooler just hearing that. So that's what we got. Quick predictions. Super Bowl 59 is on Sunday. What's the final score, Sarah?
Eagles. I don't know what the score is going to be, but Eagles win.
Eagles by 50. All right. If you want to follow Sarah, she's at Ty_Ty Time. You can follow me at Tom Toole, 3RD, both on Instagram. And we'll be back next week on Toole Time Real Estate Radio on WWDB 860 AM.